following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Monday night here in Asia and Monday morning there in the USA. So I tell you what, we're going to move right into gold and the U.S. Treasury components here, and let's just start talking about it. Gold, obviously, significant little move last week, closed right there. Let's just see what the highs were. 1228 rounded off. Those weekly unfair highs we talked about are at 1229 rounded off. And so far this morning, we've kind of gone up slightly above there, 1232. Give yourself a little bit of noise on these little situations. I've talked to a lot of people in Asia at some desks around here. And the reason we're starting with this is they actually think gold's going to break out again, and I'm looking at it. You know, I'm not as bullish as some of those guys. I'm looking at what's happened here on the intermediate. We obviously had some great little trading opportunities. We closed above the 1210. I was a big fan of maybe even shorting against that. Proven wrong pretty quickly. Close above, go back and retest twice. It's held that 1210 area, and that's been kind of nice. As we look at, hold on 2 seconds here. Let me catch up somebody. And as we look at this moving forward, we always talk about weekly takes precedence over daily over 240 down the line. And for sure, these weekly inflection points are the most powerful things on the board. So I'm going to go back to this and just kind of, back up a little bit. I know everybody's getting a little gold fever right now because we've made some charges forward here. Again, we didn't have a weekly close last week above this major inflection point, and if we kind of compress here and just kind of hang around that area above and below and just kind of build cause, as Tom would say, that's actually relatively bullish for gold. But I'm not a big fan of stepping in large on gold yet. I'd love to see some confirmations on a long-term trend change. Just like we had here, we had a pretty violent move above this 1232 area before, and that was good for quite a few points. In fact, we reached a high of 1309. So, you're not going to make everything in one day. This is a process, and in my opinion, we need to get some confirmations on gold. And, I'm going to look at something else really quick here. Haven't had a lot of divergent situations on gold. So, again, I'm just kind of a wait and see on this one. I'm actually kind of a big fan of trying a short around this 1229 area and letting it unwind a little bit. I mean, we've come off, this morning, we pretty much got away from that inflection point, $6 or $7, $8 an ounce. But let's move into the treasuries really quick. Okay, and the reason I'm pulling up the gold and the treasury grid is we're going to have Eric on in just a bit here, Eric Courtney, if he's up in New York on Wall Street, and we're going to kind of get some of his thoughts. We're going to talk about rates a little bit. But as we look at the long term on the 10-year, we talk pretty religiously about a close, going to have to be below this 127.11 area. And when we're looking at this, I'm going to go back to our dailies here, and we're going to look at the thing that was on the board here, the 127 area, 127.11, that daily and weekly got across the border and get back above that area. We had the weekly close within. That was a pretty strong weekly close, by the way. For guys who are doing shorter term trading, it was okay to kind of get back in the water, back above 127.11 on the long side. The talk is, I know you guys have been watching the TV or reading Bloomberg reports or whatever, and some of the news coming out last week. I mean, we're basically at all-time low rates right now, and any blip on the radar screen that the economy's not turning around. Maybe, they're, oh God, we're never going to raise rates again, and we're going to keep rates at basically next to nothing. And the market loves that. The U.S. stock market just is happy with information like that. Let me look and see if Eric's on with us yet here. Okay, not yet. So going that route, we're going to take a look at the U.S. stock market, the S&P 500 really quick. Now, we've been a big fan of not getting involved with this rally. You can't, look at this. We've kind of made new all-time highs. We're not really lurching forward like we should. All right, let me let Eric know they're trying to get hold of him here. Eric's old school, and sometimes the technical part of it is old school too. Let me make sure he's available, and they're trying to call him. Okay, so they'll figure that out. So as we look at the S&Ps, the reason we were looking at this from the not take the long side is as we go into our profile heat map here from the global indices that we look at. Let's just go right into the S&Ps. Let me hit that. And I'm going to look at our breadth here. Now, we were just flip-flopping around, and I'm going to pull up our breadth chart and just kind of give you an idea of what I was referring to. I'm just going to blow this up a little bit. So as we look at this, from the time we broke out, which was, let me just go back to the chart. From the time we first started breaking out, what was that? Middle of March, first time we poked our head above a weekly profile after we pulled back. And then we kind of started again around 1st of April, let's just call it. So let's go back into our breadth charts here, the daily. Here's the middle of March. We poked our head above. We've been flip-flopping around. Let me just take out the middle ground. We've been flip-flopping around as this market has kind of gradually had some trading opportunities on the short side. We've just been flip-flopping around. I'm still not a big fan that, there's complete direction and cohesiveness amongst the internals of the S&P 500. And that means that, how do you trade the index when everything's kind of all over the place? Like Steve Rhodes said, this is kind of boring itself out right now. This may be finally a stock picker's market. And I remember when he said that, and, it's kind of hitting home now. A lot of people that, a lot of technical difficulties again here. A lot of people have, they've done some historical and research data on, normal, average Joe investors in 2014. Most of them lost money, or not lost a lot of money, but they didn't make money. And, maybe they're in the wrong stocks, maybe they're picking the wrong stocks. But what we try to do on TFNN is just try to put some of these probabilities in your face with stops oriented around those probabilities, so you can hopefully make a good decision. Now, I heard something else on. Let me see how much time we have left here. Okay, I think we've got Eric now. Eric, are you there with us?
I'm here. Can you hear me? Everything good?
Yeah, great. Good to hear you, man. How is New York today?
Well, New York's chilly. I think it's about 48, 50 degrees in New York today for some reason. I'm not sure why, but we got a little cold front coming through. But New York is under control. It's what I call it's a fourth world city. We got the first, second, third world. This is the fourth world city. You have more pockets of different types of people in this city interrelating and interacting than anything in the world, and I marvel at it. It's fun to watch, but it can be scary.
It's like a balmy 100 here, I think, during the day.
Yeah.
So 2 worlds away. Hey, Eric, before we got about 3 minutes before we go to our first break, and I really appreciate you joining us today, and I'm just ecstatic. We're going to start talking about rates with you. I was kind of finishing up on the stock pickers market, possibly now here to stay. And I was listening to some, news reports and some folks that were in front of quite a few people on the TV, talking about some of the average Joe and what he had done in his portfolio in 2014. Most of them percentages, high percentages. Most of them didn't make money, and they were basically trying to blame this on trying to time the market or being in some of the wrong stocks and not holding on to their core positions. And I'm just sitting here thinking, my sister held on to a core position, point of fact, in 2008 called Wachovia. She worked for Wachovia for 20 years while this was going on. And that core position basically almost put her on the street. So I'm listening to these, what I would call idiots, telling people just to hold on to everything and forget about it, go to work. Yeah, that was a real good methodology in 2008, And
not really, no.
Yeah, exactly, yeah.
And the big thing I see is that the stock pickers are outperforming the indices right now, meaning hedge funds, meaning mutual funds, meaning the smart guys out there. I mean, Wall Street is no longer what it was. Used to be a great market call on Wall Street, no longer. Used to get IPOs, no longer. Used to have research departments, no longer. So everybody's kind of, it went into the cloud somehow. And now people like yourselves have come in with things that can help people understand how to pick sectors, pick stocks, focus on what their big holdings are and see the profiles. Because if that's what they can do, they'll have an idea of where they should be going and where they should be moving. I try to come in with some fundamental crap and, we go back and forth. But the technical side is really the essence of being able to handle a portfolio. Now, I'm not talking about the huge mutual fund or the big hedge fund. I'm talking about the guy out there trying. Do you know how many people are out there trying to figure out what they do with their 401k? And they are completely, like you said about Wachovia, they are so centered in their one or two stocks of the companies they worked for. They need to diversify. They need help. And we can help them. And TFNN does a great job of, people should expose themselves to that if they're serious about trying to make a living. And the only way they're going to make a living is in equity and Forex and trading. They're not going to make it buying indices and holding them anymore.
Well, I'm hearing every word you're saying, and I agree wholeheartedly. But the other side of the coin is too that it is speculation, and we're going to talk about that a little bit when we come back, Eric. And I'm really jacked up about talking about rates today with you. We'll be right back, guys.
Good.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We've got Eric Courtney with us this morning. It's a full-blown treat to have you here, Eric.
Thank you, John. Thank you. It's great to hear you.
I mean, I don't think people out there really grasp how much I love talking to you. I mean, it's I learn something every time I talk, whether we're on the air or not. I mean, it's just
likewise, John. You've done a phenomenal job. I mean, you've taken something and grown it to where it is now really there. It's useful, and
right.
with TFNN, if people would use it, they have a shot, because the confusion and the uncertainty is mind-blowing. And I talk to a lot of people on Wall Street. Their minds are blown. They don't know who's on first. They don't know. Politically, I could talk about that for a long time with you. I have ideas there.
I love hearing.
Let's talk about interest rates and the Fed. If I can give you one point, and then we can go from there. First thing with interest rates, you got to talk about debt. All right, what is the debt of this country? I mean, we've got $17 trillion in debt. We've got really $120 trillion of unfunded debts out in the world. The Fed has got $56 billion in capital, maybe $60 billion, okay? So their liabilities are about $4 trillion or whatever. Now, forget about the deficit and the political crap with that. That's nonsense. The real world is the Fed is running at about a ratio of 77-1. In terms of debt versus the real capital. Now, the Fed has not done a great job. I would say everybody likes Yellen. They want to hear what every word she says. The Fed has not done a great job over the years. I'll give you an example why. Because they've allowed the debt to grow. And, I'm a capitalist with the kind of a liberal democratic type limousine liberal, concept in my head, which is a lot of nonsense too. But it used to be in the 60s, $1 worth of debt would give you $2.41 worth of economic growth. In the 70s, a dollar worth of debt give you 41 cents growth. Today, a dollar worth of debt gives you less than 3 cents growth. Okay? So with the debt that we have and the unbelievable chasing for yield of what's happened in our economy and the change in mathematical finance because of it and the low interest rates, people are lost. They can't, so what's going to happen with interest rates and what's going to happen? How do we make money for our investors and listeners out of this? You're great on currencies. Forex is a critical thing. There's a lot more going on about Forex. First of all, the average trader can get a much better margin on Forex. And if he's careful, he can make a lot of money there, as well as, of course, stocks. But the correlationships of interest rates and where they're headed and various currencies, combined with this debt load that we have of a leverage of 77-1 on the Fed, where does the average guy go? Well, the average guy's got to look at the relationship of what I'd call simple Canadian dollar versus the Japanese yen. Canada exports oil. Japan imports oil. If you looked at the relationship between the Canadian dollar and the Japanese yen and the price of oil, you would see that when the relationship between the yen and the Canadian dollar started to go down, the price of oil followed down significantly. And you could pick it back in December of 2014, and a little earlier than that, back in the fall, you started seeing oil come down. You could have predicted what was going to go on with oil by watching the currencies. And your thoughts on currencies and how you watch them and the breadth and what's going on in that area, I think is very helpful to the big institutional guy as well as an average guy trying to understand all this stuff. And that's where I try to translate all the chaos of the cloud into English. That's where I try to make my best, effort in my life for what that's worth. And,
one of the things that, I mean, what we have and what you and I talk about all the time, we don't like to, us collectively, we don't like to complicate things too much. I mean, like when you start, throwing too many things into the machine and see what comes out the other end, it's just, there's too many variables, too many pieces of the puzzle. And, really ridiculously simply enough, we just try to block out one side of the marketplace. You and I talk about that all the time. Like, where's the risk? Can you hang around, Eric? I really want to get into
please.
Okay, cool.
I will, John. Thank you.
Yeah, guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We've got Eric Courtney with us today. And Eric, I wish we had 2 hours instead of 1, man.
Well, we maybe do some writing and at some point that might be helpful too. We can put that on the TAS, which I think would be helpful.
Yeah, we're actually doing a Bloomberg article right now. It's actually due tonight, my time, which I feel like I got a term paper due right now. But we're actually doing it on, and it's going to be in Bloomberg Markets magazine.
Great.
It's basically on the Euro US dollar situation. We might briefly throw in some S&P stuff, but what I was kind of getting and hinting at too before was this kind of, you kind of patted me on the back about a couple of things, but what we're doing, as you know, is actually trying to simplify things. And what these a lot of these guys are on TV and write the research reports, and there's this craft of throwing a lot of things against the wall, a lot of confusing comments, and then at the end you really didn't actually get what they were maybe, in a consolidated view. They leave the door open all the time to be wrong. And, in our book, we pretty much use these profiles, and I'm showing the Euro right now. We pretty much use these profiles to hey, we're going to take a shot. If it doesn't work out, we're going to take a shot. And a lot of people, will look at this Euro and go, well, you guys have kind of been short the Euro, and at 107, we kind of changed our tune a little bit. We tried it short again around 110.5, 111. That didn't work out. And then we were talking about the next place to pick a battle was 115.30, that general neighborhood. But what that does, Eric, and we talk about this all the time, you're speculating. You're you're staying with the trend as long as you can. There's still a defined long-term downtrend with this product right now. Are there going to be trading opportunities to bounce from, 104 to 114? Absolutely. That's 1,000 pips on the currencies, and we try to wait patiently, pick the battles in certain areas, but speculation really is all about odds, and you mentioned a while ago, it's the stock picker's market. Okay, well, what is that? I mean, you're speculating. I mean, should you cross the street with a Mack truck coming? No, you speculate that you probably shouldn't do that. Everything is speculation. I mean, there's nothing you do all day long that's not speculation and data driven. All right, you have an historical hard drive in your brain, and you say, you know what, I shouldn't eat or drink a bottle of vinegar because I think that I'm speculating, and that's probably not a great thing for me to do. So getting back to what you were saying, about some of the things about picking stocks earlier in our conversation, I think that ultimately now it's going to be a little harder to trade indices in general. That's my opinion.
I agree.
And the good news is, like you were speaking about before, is that the scanner kind of, we talk about blocking out one side of the marketplace with the things that we have in front of us. I mean, a lot of these technical indicators that have combined a lot of things, so it kind of, the Betty Crocker stuff is in the background, and it's kind of like just the facts out in front. But you were patting me on the back, and I was like, this is about a simple way of looking at things as I can actually think of, and that's kind of, I think the beauty of it is that it really kind of, again, blocks out one side of the marketplace. If you're looking at Apple, should you be long or short Apple right now? I haven't pulled up Apple today, but at least it tells you where you got to say uncle if you're long, and you can always get back in. And these idiots that I heard this morning and last night actually, and I read about, they were literally telling people, don't trade, buy these things long term and walk away. I mean, that's the kind of news that's going to kill people, in my opinion. So
it has. CNBC killed more people than you have any idea. I mean, with the great liquidity. What the great liquidity meant when they all used to talk about the great liquidity back a few years ago, John, you and I remember this.
Yeah.
Was debt. The bigger debt, the more money was being pumped and pumped and pumped. The Fed is responsible for the market we've seen. The low interest rates right now have created a real havoc on the curve because the people are all chasing the yield, like I talked about the other day, and it's going to be very hard with the money markets being somewhat crippled a little bit right now in many respects. It's going to be hard to unload at some point in the future. So you got to look at the bigger picture. What you do is you give people a focus as to where to look, where to pinpoint. Yeah, you could put your whole portfolio into the scanner and say, okay, everything looks so-so, but profiles look fairly good on 50%, not so good on 20%. That's one nice thing for institutions. But for the trader and for the big guy watching the big money, they need to show where the breadth is. They need to show what's happening in the real prices of what they're involved in. And they ought to focus on just those things they're really heavily involved in. As I said, the overconcentration of portfolio money in most people's accounts is beyond belief right now. They worked at Oracle, or they worked at, we all talked to Google and the Apple campuses and all that. But most people worked for some company in the Midwest that made widgets, and they own the stock, and they own 80% of their portfolios in that stock in their 401k. They need to start being able to look and start making their minds up. And they can't go anywhere anymore. You can't go to a brokerage firm and say, listen, tell me what to do. They're going to put you in about 7 or 8 indices and mutual funds and make money on that.
Annuities.
Or they love the annuities. Annuities give you nothing, Try to live on an annuity. So
try to get out of one.
Yeah, try to get out of one. And that's what's going to happen with the interest rate scenario right now because of the curve. Everybody's running to the long end. And I think we're going to see some liquidity problems in terms of being able to get at the Fed alone with what they've got to unload, and other countries too. So but that doesn't help people out there listening to you right now. What's going on right now? Rates are going to go up, John. Rates are going to have to go up. Somebody out there is going to make something happen that's going to make rates start to go up. Now, everybody's saying rates are, still going down and they're going nowhere right now. Yeah, but they're eventually going to start going up, which is going to help the overall mathematical financial integrity of the markets. There used to be a number called VAR, variance at risk, value at risk, rather, that every guy on Wall Street was supposed to know. What it means simply is, what's the risk of my portfolio in my company, of my, let's call it Lehman Brothers, okay, good example. What's my risk this morning that I'm going to lose all my money or 70% of the money? Well, the risk would be a number that they would come up with. Well, that variance at risk number now is totally confused because they don't have the analysis of these interest rates right now to be able to put any prediction on, because there's no history that we can look at, except going way back, of low rates, as prolonged low rates the way we have them. And it's going to be very interesting. So meanwhile, there's nowhere to go to make money but stocks and Forex and trading and in and out. You got to take your tax considerations into play. I talked to somebody the other day. I said, you should be in and then you should be out. Yeah, but what about my tax situation? Well, you know what? I'd rather pay 40% taxes than lose 60% of my money in my portfolio. You know what I mean?
Here. Yeah, no, I'm a big fan of that statement.
Yeah. But what are your thoughts now in terms of some of the, like the correlations you were just talking about, the article you're doing with Bloomberg? That's going to be a very interesting article. Bloomberg does a magnificent job of educating people, but also confusing people. Okay.
Yeah. That's what I was saying earlier. I mean, it's almost embarrassingly simple, but I think some of our information, trying not to complicate things. That's kind of basically, you put too many. I mean, I've talked about this a lot actually. You put too many things together, and actually, it's almost called a trade suppressor. I mean, it's almost like you can't make a decision. You can't make a confident decision because there's always something still dangling out there. I mean, what we're doing. I mean, right now. The Bloomberg representatives, there's 1,200 global salespeople that work for Bloomberg. And one of the things that they do three things when they go in front of somebody with a terminal to try to sell a terminal. And there's a huge board at Bloomberg. If you walk into the New York office, the Hong Kong office, wherever, it's just an electronic board, and it has the amount of terminals that they have active out there, what the potential new sales are, and some other stats on terminal usage. And that company breaks even on the TV show. They make their bones with 375,000 Bloomberg subscribers that pay most of the time in excess of $2,000 a terminal. That's where they make their money. All right. And those salespeople, one of the things that they put in front of somebody is they put a technical tool. They usually put our tool. That's one of the mandates down from their charting specialist head. So I feel pretty fortunate about that. We gave a lot of things away free on Bloomberg, and that was, I think they got me drunk one night to commit to that. But it's actually ended up working out very well because we basically inherited 1,200 global salespeople to go out there and throw our information in front of people. But that's not just, because. It's because, they've determined that it has a lot of value. And I'm kind of talking about ourselves too much here. But what we've done is basically, with this kind of balanced market and imbalanced market, allow people to see it as black and white as hopefully humanly possible. And and again, one of the things I'm sorry, let me finish one more 30-second segment here. Yeah. We know that people have trading systems out there. And one of the things I talk about when they invite me to go speak somewhere is it's a little more organized with a nice PowerPoint and all that. My train of thought doesn't wander like on this show sometimes. But, one of the first things I say is, hey, you guys should have a trading system already. This Bloomberg terminal is expensive. this is a great confirmation tool, in my opinion, to keep you out of trouble and to know where you might need to sit on the sidelines. Now, one of the things you talked about the S&Ps, Eric, and we talked about the breadth. We've just passed all the things we talked about earlier with stock pickers market and all that. It really is borne out in the breadth statistics, and those breadth statistics kind of kept me from wanting to go long this last kind of move up, because that's just the cooperation's not there. Has the market rallied pretty much significantly in the past 2 weeks? Yes. Do you need to be in the market all the time? As good as well as I do, you don't have to be in the market all the time. In fact, some of the best market timers, the Julian Robertsons of the world, the Paul Tudor Jones, I mean, they're not in the market all the time. They're waiting patiently until the odds are in their favor, because they're speculators, right?
That's right. Yeah.
So, that's just kind of the way it works. And
well, you know what you do? What you do very well with what you've got is, what is the financial markets about? It's nothing more than a bunch of human beings, and all human beings, whether they're running the desk at Citicorp or they're running their own portfolio sitting at home somewhere in Florida. They're trying to do the same thing. They're pursuing a similar activity, which is to try to make some money. And
right.
knowing when to fold them and when to hold them, the old song, is very critical. And what you do is you give people a sentiment feel, the breadth feel. A trader gets a feel. He can go and dig down and drill down into the scanner and get some real specific information that'll help him on a day trade or a minute-to-minute trade. But a bigger guy or a portfolio guy looking at it will start, if he spends a little of the effort that's necessary to learn it and listen to you and watch TFNN and listen to the people that are so competent on that he will get a sense that he'll have some sort of structure to work within. I try to keep telling people, you got to have an understanding of what you're about personally. You're a human being. Everybody out there is trying to do the same thing. I got guys calling me saying, what should I do? Well, you know what I ask them? How much do you need to live every quarter of the year? What money do you need? What are your bills? And let's take that out and stretch it out a little bit. And I try to put them in what I call asset dedication, to where they will make sure they have that money. And I don't care how wealthy they are. I used to, my best sales were to women of husbands who made a lot of money, because they would say, this guy is showing us how to make sure we have the money we need going forward. And people are trying to create money for themselves now. Young people have to. They have to go into the aggressive side of learning and being able to trade some and being able to move sector to sector, diversifying their overconcentration, and you give them a real handle on that. And it's not the easiest thing for people to get.
Well, thanks. Eric, can you hang around for the last segment?
Yeah, sure. Love to.
Great. Well, we'll finally get into some rate talk in just a little while.
Let's do it.
Hopefully close that up. Yep.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show, and we've still got Eric Courtney. We've got about 4 minutes left. We're going to try to cram a lot in here. And Eric, we had promised some folks we were going to kind of finish about talking about rates, and I think what you had said earlier is you think we're pretty much going to have a fundamental sea change into a little bit higher rate structure, and you don't think that's a bad idea, I assume.
Great idea. It's very important to get back to some normalization here. There's a lot of changes going on out there. Another show we'll talk about the robotics and what's happening. I mean, computers are going to make robots. And, there's 50% of the jobs in America are going to disappear in the next 20 years. So, what I'm saying is that, there are some major sea changes out there already underway. And now let's take a look at what you do.
That's what I kind of, why I wake at night thinking about is what you just said, that it is a wave of things to come for sure.
Yeah, but on the interest rate side of the equation, what's going to make rates start to go up? Well, it's going to be demand of the growth of the economy starting to be just by nature. What goes down comes up. There is going to be more growth. People are going to need a car. They're going to need to, finance. They're going to need to borrow some money. The banks have been literally sucked, between you and I, in terms of helping people out. They've done nothing but put the money in their own pocket. The corporate cash is so phenomenal out there that they're using for themselves. They're not hiring people for expanding a plant somewhere in Kentucky. But now on interest rates, the overall economy is going to start to show some strength. There's not going to be a big deal of inflation, although in food I'm a little concerned there. But basically, rates are going to start to move up. And you're going to see it in the money markets. You're going to see it in some portfolio shifting. But that's a good thing. It's a good thing for stocks. It's a good thing for the economy, which is good for stocks. And, you know, very important for us to move forward, because stagnation is what we've been in the middle of. That's why the market's confused. Are we stagnant, or what's going to, you know, is it 2% growth what I got to look forward to for the rest of our life? My kid just got out of school, he's got $400,000 in debt, can't get a job. What the hell is going on here? You know, this is not the world you and I came out of, John. This is a new world. We got to be prospectively smart about where to go. What you do with the scanner is you give people a chance to translate the emotion to the real price and the real profiles and the real breadth. And they can drill down, they can look at the big picture, they can, if I was a broker, I'd use it every day to come up with an idea of what's undervalued, what I should be telling people to trade if they want to trade, or where I should be adding. So, I mean, you know, there's a lot of education involved in this, and you've done a tremendous job, and I hope to be able to help you. Ed is great. I talked to Ed this morning. I mean, he's watching the screens, and, you know, I mean, you've got great people.
The scenes that makes it happen. You know, he's the brains back there. Yeah, I mean, we got about a minute left. I'm gonna just say that,
you go ahead.
You know, I've been we're sitting here and having a logical discussion about these rates, and I'm kind of with you on the long term, but you know, that timing, what you're saying, is always a little difficult, because that's kind of the long term MO, I think, and I'm pretty much in agreement with that at some point. Right now, from a trader's standpoint, though, I mean, you know, we've kind of literally just come off all-time low rates and not come off of them that far. So guys out there who are trading treasuries right now, you know, Bill Gross is talking about this and that, but the fact of the matter is our long-term weekly support areas have held. And that's just the technical outlook on it right now. So, Eric, you've been great.
To be continued.
And, yeah. We'll continue to talk about this. Guys, you've been great. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.